there we go. NewFunds Equity Momentum ETF. Now this tracks the top 20 South African stocks using a risk-controlled stock selection methodology run by academics, nonetheless, at Wits University, and it's issued by Absa. Now, this is not real secret sauce.
That's right. So the agency responsible for the stock selection changed about a year and a bit ago, and it is the Wits people, right?
Exactly. Yeah. So they do this in conjunction with the risk strategies team at Absa, but then this is an independently calculated index, and it is very much focusing on momentum. So this index gets reconstituted every month. It doesn't change all that much every month, but it's therefore a lot more active in its index construction methodology. What I find interesting is that this one also has about 30-35% exposure to resources. So what you see between the RAFI and the momentum one is two styles that you don't often find in the same sector or the same companies offering value and having strong momentum. We currently find that in the resources sector, which for me is a very interesting insight in terms of where we are. Yes, we've seen the likes of the 47% of Satrix Resi over the last year, and the Give Resi even more than that, but they're still only about a third of their highs that they were a couple of years ago. So one could argue that there's a lot more to go within the commodity spectrum.
Just take me back a step. You were saying that the entrants to this ETF get reconstituted on a regular basis. So how does that work?
So basically they assess the momentum of the top 100 stocks on the JSE on a monthly basis, and they effectively have 12 underlying portfolios that together make up the one index. So it's almost like a little monthly portfolio, but obviously if a stock exhibits momentum for 12 months in a row, it's going to be in all 12 those sub-portfolios, and therefore will have a higher exposure in the overall index. So it is more active, there is more churn in the underlying portfolio, but it really captures momentum as and when it's there.
Which of course is an independently verified trading strategy that to some extent stocks that go up continue to go up. You do have to be a little careful that there could be breaks and so on, but again what's good about it is that it does have the rigor of kicking things out if they break down.
It sounds as though you could be interested in this one. Hot, not?
Well, you know, I prefer to be directly invested in the stocks underlying, but if there was one,
to gold
if
and
there was one,
ETFs.
If there was one, so I'll give it hot.
You're giving it a hot. There we will. Look,
finally,
got
small blessing.
one small step. Hot or not?
I am also hot on this one, and again, I love the combination of the value and the momentum because it's going to kick me out of this sector when it's no longer appropriate.
Good. Well, that was interesting as usual.